Good morning, everyone. Welcome back. Today we are joined with our good friend Andy Scheckman from Miles Franklin Precious Metals. Please check the link in the description below. Andy, it's an absolute pleasure to have you back. How are you?
Oh, you guys, it's good to be back with you both. I'm great, thank you. It's a crazy time we're living in, but can't think of two people I'd rather, discuss this with than you. So, as always, thanks for having me. I appreciate it.
We have a lot to talk about. Let's just get right into it. The Federal Reserve just cut rates by 50 basis points for the first time in 4 years. For those out there who don't know, cutting rates means that money becomes more easily accessible, but it's the institutions who do get the money first. And by the time it reaches to the public, purchasing power has already been devalued because every time we print more money, it takes a little bit of purchasing power from every other dollar already in existence. And I know some traders are optimistic about this, but it comes at a very high cost because that creates inflation and it devalues the currency even further. So it really benefits the top 1% who use this as an opportunity to really buy up the assets that the middle class, lower income people can't afford to hold on to. Andy, how do you see these rate cuts impacting the markets, and what does this overall mean for the dollar and the US economy?
Yeah, I mean, it's called, well, what you're speaking of first and foremost is called the Cantillon effect. And the Cantillon effect is something that people should understand. When you just simply say it benefits the people at the top, the whole theory of the Cantillon effect is that it benefits the people closest to the money, like the hedge funds who can borrow money at next to nothing and plow it into assets and make a fortune on whatever it is that they're buying or jacking up in value because of all the easy money, the low rates, and the ability for them to quickly get it and then apply it into assets. And the wealthy people, you guys, as you know, own assets. It's not about having big bank accounts, as I'm sure they do. It's about assets. And the Cantillon effect says those who have the ability to get that money first have a disproportionate benefit to the rest. And that's true. And to your point, by the time the money trickles on down through the system, it works itself out in the form of much higher inflation. And the people who can least afford that inflation are disproportionately affected in the cost of food and energy and housing and all the things that we see inflating as the asset prices have made the wealthy much wealthier. And it's absurd, if you ask me, you guys, for the Federal Reserve's Open Market Committee to think they know exactly where the interest rate should be based upon millions of savers and borrowers and spenders and manufacturers. The whole thing is quite absurd. And the CPI, which should be called the CP lie, is a worthless statistic. It's a worthless statistic. It's misleading. It's governmental propaganda, if you will, which is there to conceal their ridiculous and irresponsible spending. And they will continually change the metrics by which the CP lie are used or are using in order to figure out where inflation is. Like, for example, in April, a few months back, they took coffee out of the CPI because it had been up 80% year over year. I don't know what they replaced it with, maybe tea. But they have things like if steak is too expensive, they'll replace it with ground beef. All of this nonsense, which is being done in order to create this agenda that they have or to facilitate this inflationary agenda. And, what's interesting about it is that this is being done at a time where you have markets near all-time highs, where you have real estate priced much higher than it was in the 2006 peak. And yet they're still 60% off of their target rate of 2% inflation. So I guess what they want us to believe, or we're being gaslit into believing that they've won the battle on inflation. In fact, in my opinion, they've thrown the white flag the way that all governments do. And, look, they cut this right at a time we got gold showing the reality of it. They tried to knock it down right after the cut. And here we are again right now, back to pretty damn near all-time highs at just about $2,590 an ounce, and silver over 31. I think it's an indictment to the system, and it's not to be surprised. And one last piece that I found really interesting is that they cut rates, and the back end of the yield curve, or the back end of the curve, goes up. In other words, the long bonds, the yields went up. In other words, that's the world saying, no, we really don't want your treasuries, especially you're a government that's creating $1 trillion in debt every 100 days, or in essence, 100,000 in debt every second, 24/7. It took 200 years to do that the first time. We're doing it now in 3 months. And yet we're going to pivot and lower rates. Why would anyone want to hold our treasuries of any duration? And even though it just went up a little bit, the fact that it did go up in the face of cutting of short-term rates, I think is somewhat emblematic of where we can expect things to go on a much larger scale. It's foolhardy, but that's what the Fed does, and that's what all governments have done since the beginning of time. And that is that they give into inflation instead of austerity, instead of making the tough choices.
New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Well, yeah. Vandell?
It's a bunch of nonsense. First of all, unemployment is a lagging indicator, meaning by the time they pivot, we're already in a recession in terms of their reaction to lagging unemployment. You have recession indicators like the SAM rule, which talks about unemployment coming up, I think, on a 3-month moving average above 50 basis points. We're already above that from its low. And, when you talk about employment being strong, they just got rid of 1.3 million jobs, full-time, high-paying jobs, and replaced them with like 650,000 part-time jobs, mostly filled with people in this country illegally. Everything that comes out of that man's mouth is a lie. It's gaslighting. It's a bunch of nonsense. And, I would argue that the economy is not on solid footing. The labor market is not very solid. It's all a bunch of misleading propaganda. And it's really a shame that most people, look, you can't get out of the way what you don't see coming, and people are listening to this thinking that everything is okay. Far from it. Quite to the contrary. I think he's not doing the American public a service whatsoever.
Yeah, I agree with Andy 100%. They're just pushing a narrative, trying to keep the public from panicking, making it sound like everything's all dandy. And the metrics they use to calculate it is it's flawed anyway.
Well, you want to talk about flawed. According to the government, the cost of health insurance has declined 31% over the last 2 years and 10% over the last 5 years. That's in the CPI numbers. I don't understand where the hell they're getting these numbers, because everywhere I look, the cost of insurance is going higher. And so, again, it's a bunch of nonsense. Their dual mandate is nothing but a lie. Whether you're talking about the real level of unemployment, I think it used to be called U6, I think, which, all the people who just stop looking for work, they've given up, they fall off the charts, and they're now considered, they're not factored into the equation. And when you look at good paying jobs being shed, replaced with part-time jobs, the economy is not anywhere near as strong as they want us to believe. And, again, when you talk about revising nearly 1 million jobs last year, every target that they said they hit, in retrospect, they didn't hit. So between massaging and changing the numbers, look, John Williams of Shadow Stats will tell you flat out simply, you add 8 to the number or to the percentage of inflation that they tell you, which means we're at 11% inflation. And all he does, you guys, is measure inflation by the way it used to be calculated before they went on this spree of changing the numbers to fit this agenda. So we're at 11% inflation, and the unemployment rate is at least 3, 4, 5 times what they tell us. And the good paying jobs are disappearing, replaced with part-time jobs, many of which are being taken by people in this country illegally. It is not what they want us to believe. And that's the most important thing. And it sucks having to say this stuff, but it's true. Do a little digging yourself. Go listen to John Williams of shadowstats.com, and you'll hear all you need to hear. All of it factually based. simply based upon the metrics that they used to have in place, but they've now changed to fit this agenda of misinformation and flat out lying. I mean, the CP lie coming out of the Bureau of Labor Statistics. You got to take the L out of the Bureau of Labor Statistics, just call it bullshit. The CP lie is issued by the bullshit. I mean, and that's really truly what it is, you guys. And sorry to be profane, but I think that's exactly what's happening. And it's sad because this is the information that gauges the way that a lot of business activity is then conducted, and it's just leading people down the wrong path.
Can I just say one thing about the unemployment? You mentioned the part-time jobs. This is another thing that people can't really wrap their head around, but I'll just elaborate on it. So, for example, there's a lot of part-time jobs, okay? Not great jobs, not full-time jobs that pay well, that keep up with the currency debasement and inflation. So, for example, there could be multiple people or one person working 2 or 3 jobs. So there are more part-time jobs, okay, but that's actually one of the biggest signals that the economy is in even shittier shape than it was before. Because if you have to work more than one job just to keep up with rent, bills, and putting food on the table, it tells you all you need to know. That means people are really hurting and feeling the pain from their buying power just being obliterated.
Right. To your point, we've now gone on 16, if not 17 straight months of part-time job gains, where the job creation that we are seeing is all part-time and at the expense of 1.5 million or so full-time jobs. So you're right. It's very, very, very misleading. And that's the point to take away from all of this is that not only have they been wrong going all the way back to 2008 when Bernanke told us the subprime crisis was contained, or that there was no inflation, or that it was transitory, or anything that they tell us, there won't be any rate cuts, there will be 4 rate cuts. I mean, everything they tell us is just wrong. And it's always lagging or in retrospect or in hindsight. And then they give us these numbers that Biden was touting as such a great economy. Look at the unemployment numbers, and then by the way, we were off by about 1 million jobs. Yeah, they corrected 818,000, but that doesn't take into account the 100 or 200,000 that they did throughout the year. We're over 1 million jobs that they just mysteriously pulled off the table after touting what a great economy it was. And then when you talk about inflation, well, if you're going to massage the numbers and say it's 3%, but look, you get 5% in a short-term treasury. Yeah, all is great, but when you realize that inflation is actually 11 or 12%, you're actually experience a negative real yield or a negative real return. Things are not as they are purported to be, and that's why you have to think as a contrarian. And this is not about becoming wealthy, you guys. This is getting out of the way of what's coming, and there are very few places to do it that are outside the matrix, that are outside the system. But you can see, if you look closely enough, that assets are leading the charge. And if you take a look at really what Zoltan Pozar said, this is a system about he or she who has assets wins. And you look at much of the Southern Hemisphere, you look at the BRICS countries, they're loading up on assets, on gold, on silver, on base metals, on soft commodities, on anything tangible. And they're breaking away from this system. Even our allies in Saudi Arabia mysteriously bought 260 metric tons of gold, I think the number was, here in August, and only because they were caught by the import-export numbers. They don't tell anybody. Or India, who just imported another massive amount of silver. Let me see the exact numbers that they purchased. They just purchased $1.3 billion or 45 million ounces in August alone, after purchasing damn near 700 million ounces in the last 2.5-3 years. This is a drive that we are seeing, because not only do they know that the numbers that we are talking about are nonsense, I think they are using this inherent dollar strength as an intent specifically to de-dollarize and accumulate the world's commodities. And we're seeing it over and over and over and over again without any mention by the Western media. That's why what you guys are doing is so important, waking up people's collective understanding, if you will, of what is exactly happening, that you're not getting anywhere in the mainstream, even places like Fox News that people would go to thinking, well, it's going to tell you the truth. Not really. They're not really telling you much of anything. They're just fomenting more divisiveness that we see. You have to dig a little bit deeper to see that the big money, the most sophisticated money, the people that know the playbook, they are continually de-dollarizing and doing so by shedding U.S. treasuries and buying commodities. And that's the most important thing here, is that this is a system that is moving from opaque debt promises, from an insolvent country who's at 125% debt to GDP and going around the world imposing sanctions, and transitioning to cooperative partnerships, and those who have commodities win at the end of the day. I think this is a trend that's just beginning.
And accelerating.
Yeah.
And accelerating.
Yeah,
you're
very
right.
well explained, Andy. Yeah.
You're right. And you get this. This is really cool. Do you guys know who John Little is of the Pickaxe? I don't know if you know who he is, but he's a very interesting guy, a hell of a researcher. And he wrote something the other day. I read it, talking about how the Saudi Arabian Monetary Authority bought 160 tons of gold and was only discovered because of the import-export numbers, and that this purchase was done discreetly without public announcement or disclosure. Well, you wonder about how many countries are doing the same thing. They said China stopped buying gold for a couple months, and the import-export number said, no, that's not true. Here they are. It was a bunch of crap, obviously. And how many of these countries are using sovereign wealth funds or commercial banks to buy things like gold from entities that don't report to the IMF, like refineries in South Africa or in Switzerland, if purchased not by an entity like a government entity, it could be a commercial bank or a sovereign wealth fund, that's not reported to the IMF. If gold doesn't meet the 995 purity, it's not reported to the IMF. All of this stuff is being done under the table. Well, they got caught, big deal. But what he wrote was very interesting. And he says, I changed it a little bit to reflect current numbers, but with gold at $2,590 an ounce and oil at 70 a barrel. Now, I've talked a lot about gold and oil being remonetized across the globe. You look at this big deal that China just was awarded a big contract from Iran to modernize their airport, $2 billion contract they're paying for it in oil. You're seeing all of these deals that are talking about gold backing a new currency system, the unit, and everyone's buying gold, and gold was reclassified tier 1. Well, here's why. Right now, 1 ounce of gold buys 37 barrels of oil. And, you have in a lady's purse was the explanation that he showed, or he just did some numbers, did some basic math. And he said a woman's purse with a reinforced strap could hold 20 pounds, which works out to 290 ounces of gold. Well, 290 ounces of gold right now in a woman's purse is worth 10,730 barrels of oil. So when you talk about what gold is wealth, and that is understood by much of the world. And they are transitioning away from taking dollars that are being inflated away to the tune of $100,000 per second. 1, 2, 3, keep on going. And that's why gold keeps going higher, even in the face of positive real yield that we're supposed to believe coming out of the bullshit. I mean, the BLS and their CP lie, we're supposed to believe that that's true. And in the face of a really strong dollar, and in the face of all of this stuff where the West is selling gold and silver, and ETF outflows showing the public isn't participating, well, why does it keep going higher? Because the people that know the playbook, the central banks, are saying, hey, man, no, this is real. And this is why we're going to keep on buying and using the suppression of the Western paper markets against us. And that's exactly what they are doing by standing for delivery. And that's what's different than anything I've ever seen before, you guys, is that no one ever stood for delivery. But they are draining the LBMA and they are draining the COMEX, literally draining it. And when you look at what's happening right now on COMEX, it's almost as if, and maybe I'm getting ahead of myself, it's almost as if that the commercial banks finally get this. Because if you look at the commitment of traders report for this week, it shows that the commercial banks covered a tremendous amount of gold and silver. And they were doing so not by fleecing the managed money. In other words, the managed money didn't cough up all the metal for them to cover. It came from the producers. So, in other words, the miners. And so usually when we see the commercial banks cover, it's at the expense of the hedge funds. The hedge funds this time said, no, we're not going to sell. So they had to scramble and get it from the producers in order to cover their positions. It's getting to the point where being naked short in this environment is as dangerous as it gets and as stupid as a mud wall. So maybe, just maybe, we are beginning to see a period of time where these commercial banks understand that the game is over. And what has been very collusive, where they were all combined together, where right now there are 8 commercial banks on COMEX, 8, that maintain the largest concentrated short position, that's in silver, of any commodity ever traded in the history of the COMEX market. Now, why the hell would they do that? I have a theory on that, which I'm happy to show you guys. But the point of it is that you have 8 banks that have been doing this together, all Western banks from the UK and the United States, and they've all been suppressing the price of gold and silver to maintain this illusion. And now it looks like they're breaking ranks. And at some point, I think it's every man for himself, and they will eat themselves and not be collusive, because when you're naked short to the point where the LBMA right now, you guys, the London Bullion Metals Exchange, admits to trading 290 million ounces of silver per day. But the problem with that is that they say those numbers are 10 times understated, as they only report the final settlement numbers. So they're trading 2.9 billion ounces of silver per day, which is 3.5 times annual global mine supply and 10 times the amount of silver that supposedly they have backing those contracts. And they're all paper contracts, 95% or so paper contracts being laid out by the bullion banks, who figure they can just put more shorts on, inflict more pain, and people will back away. But what you have right now are governments like India and China saying, I don't care about any of that. We're going to stand for delivery. Thank you very much. And that's exactly what they are doing. The game is getting close to being over. And I've never said that before, because I never thought that the United States would give up power. But it's getting to a point where we're not going to have choice in giving up power. And the rest of the world is uniting against us in a very effective and methodical manner. Before they pull the trigger, they will have drained literally anything that is not nailed down. And we've been seeing that over the last couple of years by the massive deliveries. In fact, I'll look here real quick if you want to push back on that, and I'll give you some numbers that'll blow your mind just in terms of delivery numbers real quick. The LBMA shows that in August, just in the month of August, we saw, in terms of silver, 27 million ounces, or 8.1% of the available silver at the LBMA was delivered in the month of August. 8% in the month of August alone, 27 million ounces coming out of the London vaults. Who's got that kind of money? Where's it going? And who's buying it all? And now you got Russia just coming out and saying that for the entire month that they are going to purchase, for the entire month now of September, they're going to purchase $90 million worth of gold per day, every single day. And so when you're talking about what that really represents, these are numbers that the world has never really experienced before. And so it's beginning to speed up faster and faster and faster. To your point, that's 36,000 ounces of gold per day, every day for this month that they're going to buy. It's crazy. And one last thing, when you talk about since November 2020, when prior to that, I started talking right around that time about all the deliveries that were coming off of COMEX. That's when I really started doing podcasts. And I was saying, look, no one ever stood for delivery. This is really strange. 2,136 tons of gold have stood for delivery off of COMEX since November 2020, and 24,072 tons of silver have stood for delivery. This is the difference, is that these countries not only are coordinated, motivated, sophisticated, and wealthy, and they realized, going on almost 4 years now, the way to beat the West is not to get into a hot war with them, but to use the suppression of the commodities that they are suppressing in order to maintain strength of bond market, the illusion of the supremacy of the dollar and the system and the Western system against us. And that is what they are doing by standing for delivery. Never happened before. It's something to take very, very, I think, note of and watch it, because we're getting to that point where these commercial banks are going to say, I can't do this anymore because we don't have the ability to deliver if we have to. And that's why I think things are beginning to change.
And real quick, may I add something to your point? Very well explained, Andy. And in regards to gold, particularly as a wealth preservation or hedge against currency debasement and inflation, I had a conversation with some idiot recently, and he said, No, it's not wealth preservation. And you know what's so interesting? Looking at the data, and this is what I love about you, Andy. Every statement and argument you make is like a lawyer in a courtroom because you have strong facts and datas and figures to back up every argument you have, which strengthens your case, and it's unarguably true. So speaking of the data, in 1929, 10 kilograms of gold would buy you one whole house. Fast forward to today, with all the currency debasement and going off the gold standard, that same 10 kilograms of gold today will buy you two houses at the current prices they're at. So that's wealth preservation and fighting currency debasement and inflation. Gold. A home priced in US dollars is just increasing, but a home measured in gold is not.
Yeah, and I love that point. I love that point, Vandell. And go back to 1960, same thing. Price of a house was $17,000. Gold was $39. That's 435 ounces, right? So in 1960, you made a decision. Your grandparents did. Should we use the gold that we were, gifted by grandma and grandpa, or should we take out a mortgage? And at 17 grand or 435 ounces of gold, your parents said, let's just stick it under the mattress for our twin boys that we're going to have here pretty soon. And okay, great. So it's been under the mattress since 1960, earning nothing but dust for going on now 64 years. And that 435 ounces of gold today at what are we at? We're at $2,590. So $2,590 times 435. Well, that's $1,126,000. The average price of a house right now is $4,000. To your point, that almost buys you three houses. Here's another way of looking at it too, real quick. You go back to 1971. The cost of a 400-ounce gold bar, a London Good Delivery bar, was $14,000. Or, in other words, in 1971, $14,000 was 400 ounces of 400 ounces of gold. In 2000, $14,000 was 49 ounces of gold. And today in 2024, it's 6 ounces of gold. So you tell me, this is in fact outperformed to the idiot that you were talking to. Exactly. Every traditional asset on the planet. Now, I didn't say Bitcoin. I said every traditional asset. It's averaged 9.9% compounding since 2000 as an asset that does not pay any coupon, any yield, any interest. It's doubled the performance of the 10-year Treasury, and it's beat the S&P 500 just barely, which has averaged 9.4% compounding with dividends reinvested. So it's even beat the S&P with dividends reinvested. So what gold is, it's the tortoise. At the end of the race, the tortoise wins. And here we are again. It's up over 20% so far this year. So it does preserve. And to this gentleman's point, again, it's about not understanding reality. It's not understanding the facts and just being biased based upon people saying that it's a pet rock that doesn't earn any interest. Well, yeah, I understand that, but do your homework and you'll find that you're actually an idiot, to your point, Vandell.
For many decades, the dollar has been the reserve currency. And the system is what I would describe as long in the tooth. And the central bankers are trying to bring in a new system, but it's not ready to go yet. And we're in a period of great change and uncertainty where the central bankers are trying to keep the dollar system going and accelerate. So they're trying to lengthen the dollar system, and then they're trying to accelerate bringing in the new system. So I describe the new system as the end of currencies. So we're not bringing in a new currency. We're essentially bringing in a new transaction system that will be all digital and essentially end currencies as we know them. So what they're trying to do involves essentially all the money on the planet.
They are purposely destroying the currency system, this system.
Yep.
And indeed, there will be a transition to a digital system. There is no question about that whatsoever. I guess the only question is, what does that look like? And how does it unfold? Is it done in an orderly fashion, or is it done in a chaotic fashion? And I think the only way that you can transition, at least in this country, to a central bank digital currency or to a digital system will be one through chaos, where people have to experience some sort of pain in order to come in and accept a new system. As much as you guys understand digital currencies and a digital platform, most people in this country have no idea, would be terrified by it, would be afraid by it, would be told that it's the end of our privacy, etc. And I think that's how they will implement it. It would be some sort of a move. I mean, all of the things that we are doing, you guys, to incentivize the world to dump dollars, as I've talked about with you before, it's accelerating, weaponizing of the dollar, confiscating $5 billion in Russian reserves here in this country and giving them in the form of, giving it to the Ukraine, the country they're in the midst of a war against, much in the form of weaponry, creating $100,000 of debt per second, or $1 trillion every 100 days. It took 200 years to do it the first time. Having massive divisiveness in this country, lawlessness, open borders, questions about the integrity of our judicial system and our electoral system. Everything we are doing is incentivizing this, which brings me back to Jared Bernstein, the lead economic advisor to this country, who many of you have watched try to explain money creation and bond sales on Twitter. Was the most embarrassing thing I've ever seen in my life. And this is the guy that's the lead economic advisor of the country, a man who has a degree in music and a master's degree in social work, who advocates for the removal of the world reserve status, that it is a privilege we could no longer afford. Heck, even Vance, Trump's running mate, says having the world reserve currency may not be such a good thing after all. Both of the candidates are talking about low interest rates and a weak dollar, which is the worst thing that we can do. So we are moving towards a reset, and I think Trump understands that. But we are moving towards a reset where the dollar is no longer the world reserve currency, or at least not in its current fashion. And everything we are doing is incentivizing this because, little boys and girls who grew up around the world idolizing this country, wanting to wear Levi's jeans and come here and enjoy the freedom and listen to rock and roll and do the things that we have been privileged to do in this country. Well, if that was the case, I think we could probably pull ourselves up from this mess that we're in and try and fix it. But you look around and see what's happening in this country on a larger scale, and the people around the world are saying, what the hell's happening in this country? And so you put it together with massive, horrible monetary policy, brain dead monetary policy, incredibly irresponsible fiscal policy, and then the lawlessness and the open borders and the elections and the judicial system, all of this stuff where, half of the world is thinking, I don't know if it's legit anymore. And then we're 123% debt to GDP. When I was young in this business, you guys, I've been doing this for 35 years in February. It'll be 35 years. But when I was young in this business, if you're over 100% debt to GDP, you're a banana republic, especially if you have questions surrounding your elections and around your judicial system. And now, we fit the model of a banana republic, and you add into it all this nonsense we're doing around the world, we're going to experience a reset. And that's why you see the biggest money in the world, the central banks, going out of their way to strike contracts for other forms of trade and settlement, which would supersede or get rid of the intermediary system, the SWIFT system, to sidestep it, to sidestep the Western hegemony. That's why you're seeing all of these countries go on a massive buying spree of commodities and stand for delivery. And the only reason they're not bitching right now about the Western manipulation is that they are using the manipulation against us in every single commodity. And it's not just precious metals. China just bought the LME, the London Metals Exchange, which are all the base metals, the copper, the zinc, and now they're building warehouses in China to stockpile them. And all of the deals they're striking through the Belt Road, 150 plus countries, the majority of them are resource rich and underdeveloped. So they build the infrastructure and they pull the commodities out of the ground to industrialize these countries, to make them wealthy and to take a piece of it. And at the same time, we're focused on a bunch of nonsense in this country. So the rest of the world sees what's happening and they are methodically, slowly repositioning away from the West. So yeah, it's never been more important. And here we are, less than a month away from the big BRICS meeting, where another 59 countries have formally applied to it, where they've already agreed in principle to a new settlement currency called the unit, traded over Project Bridge, which is not compatible to the dollar, which Saudi Arabia just became a full participant in, and saying that the unit token, which we've agreed in principle, and Dilma Rousseff, by the way, is no small chimp. She's the former president of Brazil and the head of the BRICS New Development Bank. Yes, in principle, we've agreed to this new settlement system, which will be 40% gold-backed and redeemable. All of the things that you're talking about are happening. Now, I have a question for you, all right, because this is something that I want to try and understand. And maybe if anyone can answer it, it's you guys. And I have much respect for the research you guys do, and I know very, very well how much research you guys have done. Just in what you've sent me over the last few years, I know how deep you dig. All right, so Delma says we're going to use Project Enbridge, which is a cross-border payment system that evades, if you will, SWIFT and allows these countries to trade with one another using CBDCs outside the realm of the West. It was designed and developed by China, Hong Kong, Thailand, and the UAE. Interesting, the UAE, of course, has just joined BRICS, along with the other countries that were admitted here last year. They're the seventh largest producer of oil in the world. They're an OPEC country. They said, we don't want to take dollars for oil anymore just a few months ago. They're a big player. And now you have Saudi Arabia sign on as a full participant. Huge deal. Marusov says that this new unit token will trade over Project Enbridge. Explain to me, where does XRP fit into Project Enbridge? Does it have a role with Project Enbridge?
This document from the Bank of International Settlements talks about Project Enbridge and that the Saudi Central Bank is a full participant in Project Enbridge. We got the same document talking about Russia as well, very similar to this one. Now, in 2018, we got a document like this. Saudi Arabia Central Bank signs blockchain deal with Ripple. The thing is, what people need to understand is that there's no political bias for the digital asset XRP. I can, of course, go on forever about
Well, no,
this.
I mean, maybe that's the moment that everyone has been waiting for regarding XRP and Ripple Labs and whatnot, because, look, we're less than a month away from this meeting where she did say that indeed they've agreed in principle, and supposedly sometime in the next week there is a meeting in China to help ratify this and then bring it to the big meeting in October. But there's no question in my mind that something like this is coming. And, it's one of these deals that we'll wake up on a Monday morning and see a new reality, much like the way that the yen collapsed, the carry trade collapsed on a Sunday night, Monday morning, you wake up to a new reality. There are those that call that Project Sandman or the night of the switch, where all of a sudden everyone dumps dollars in U.S. treasuries and a new system unfolds. Maybe it comes on the heels of the big meeting in October where they come out and say, we've agreed to a new payment system. They talk about the BRICS bridge, which is Enbridge, and they talk about the common unit of account, which is the unit. But they also came out and said that they're issuing something called a settlement depository called BRICS Clear. I think that might be what you're talking about, where they're using blockchain to record securities and exchange them. Question is, are they going to use securities the same way as they will, or in the same vein as they would stablecoin? That I'm not quite sure. But to your point, and I think to this whole discussion, we are moving to a system that is moving away from traditional forms of settlement, traditional forms of currency, and the game is changing. And I think, kind of like a roll of toilet paper that gets close to the end and you start to see it spinning faster and you start to see the cardboard, we're less than 2 months away from these kinds of things being made real. And I don't know that it happens in October, but I think we're getting much closer than we've ever been to all of your work and all of your research really bearing fruit for everyone to see in real time.
Well, what's interesting, Andy? So there's a few different digital assets that have most likely been chosen and backed by, call it what you want, the cabal, the big money, the intelligence agencies, kind of like they did during the dot-com era when the internet was becoming a thing. You have CIA money behind Google, some other big companies out there, and they came out of Silicon Valley. They were just chosen, given enough money to keep failing and failing until they were profitable. And now they're the biggest companies in the world. And Palantir is another example. But specifically on Ripple, this is interesting. And you've probably seen this in the past, but I think it's more relevant today than it ever was before. So the World Bank, the parent company of the World Bank is the United Nations. Right, the World Bank in Washington, D.C. In 2021, they published a report, and they specifically, in that report, which was over 90 pages, I think it was page 31 or something like that, where they specifically talked about the use case for moving value for two digital assets they were speaking about in great detail. The first was XRP, and the second was XLM. This came out of the World Bank. Interestingly,
There you go.
oh yes, yes. And what's extremely interesting here is a lot of people get this misconception that, oh, the stable coin is going to replace the digital asset XRP or XLM, whatever. But no, that's incorrect. The stable coin's task is to connect. It's designed for institutional use to connect traditional finance to the future of finance.
The bridge.
Yes, it's a bridge. The digital asset, which is specifically designed for liquidity purposes, is designed to move and facilitate value and liquidity instantly. So the stable coin has its own place, and the digital asset XRP and XLM have their place in the center of the system to move the value back and forth. So the thing is, there's only 100 billion XRP in existence. It cannot be created, not anymore can be created, and not anymore will be created. So it's a locked cap. Now, the interesting thing is XRP's ultimate goal, which was on their website. This was on their website, Andy, and they removed it a couple of years ago. It said, Ripple's goal is to make XRP a world reserve digital currency. This was on their website, okay? People told me, oh, their agenda has changed. But no, what I think has changed is the narrative.
Yes.
Because people started to catch on. They stopped publishing their documentation mentioning these keywords, although they discuss it in such a precise fashion that you know exactly what they're talking about if you pay attention. But they're not saying the word anymore. But the thing is, there's only 100 billion XRP. Their goal is to target the derivatives markets. We're talking about all the money be a digital world reserve currency. So there could exist multiple ones in the future. We don't know. This is new uncharted territory. But the interesting thing is, with 100 billion capped, people say, okay, how will the value and the price go up for this XRP digital asset? Well, if there's only 100 billion and institutions globally or in the United States have to use it to facilitate liquidity, so not buy it and sell it back on the market, but buy it, keep it, and use it. It's just economics 101. It's supply and demand. You got 100 billion over time. As more adoption takes place, more use case comes in, these institutions are going to be acquiring it, and they're never going to sell it back on the market because it's not designed for shallow trading back and forth. It's designed for use case, which is moving value. So over time, they're just going to acquire it and not put it back on the market. This will create a supply shock in the future.
Yes. And if I can add some flavor to that, when you look at all the debt and the derivatives and pretty much everything is being tokenized. And when you look at all that value, all that money just sitting out there, you have to understand that 100 billion XRP is not even close to enough to service the global economy. And those who say that it's too much, they really don't understand the goal of what Ripple was trying to do here. Because when the time comes and we're talking about this currency reset, I can tell you 100 billion, it's not going to be enough to meet the global demand that has not been recognized. And that's what really we're talking about.
And why would $1 trillion every single 100 days, every 3 months? So
exactly.
Yeah, I mean, and I like how it burns at such a very slow rate, because you want a currency or anything that pretends to be or act as a currency to have stability, right? And that's why Bitcoin could never be a currency, because you can't use it to buy a pizza only to find out it could buy you a Porsche by the time you're done eating. And when you talk about XRP, do you envision a period of time where it goes like that and pops? Or is it going to be something that just slowly ratchets higher and higher and higher?
There are two scenarios.
Another question that's worth explaining and understanding.
Or the other way this could happen is that the monetary system just evolves.
That's what I'm kind of getting at, and I think that would probably be the best thing for for holders of XRP would be for it to just evolve. That would be my personal
But
opinion.
you know what's
because then
interesting? Go ahead,
I'm sorry.
Andy.
No, I just think that's the best way for a system to be accepted and to be used, one that maintains stability, not that is very volatile in its movements. Albeit you could argue it's been held back because of all of the litigation and all of that kind of stuff. It hasn't really found its real value yet. I would be in the camp that says the best way for this to be, for a transition to happen and to benefit those who hold it, would be for an evolving rather than a gunshot type of deal.
Well, some people, they wonder, okay, why is the XRP price not increasing substantially if it's currently being used by certain banks and institutions around the world? Well, it's really simple. Right now, there's a certain amount of money on the XRP ledger being used to transfer value. Okay, so there's this net inflow that's neutral. Now, the more the net inflow increases, the more money coming onto the ledger, the higher the price will increase in value. But so far, there hasn't been any new money on a substantial level to increase it by that much currently. But that comes with adoption over time. But that's the simple answer. There's not enough new net inflow to increase the price at the moment.
Well,
It's
you
just operating.
introduce a BRICS pay system that integrates this technology into the system, where as it is right now, just the BRICS group alone represents a larger swath of human population. And it's also important for people to understand that this new currency that they're talking about is not a BRICS currency, it's a settlement currency.
Yes.
And so it won't be just available to BRICS members. My guess is that through some form of agreements, that it will be open to all of the players around the globe. When you realize that if you take the world's GDP and look at the countries that comprise 100% of the global GDP, 99% of those countries have a CBDC in operation.
Absolutely.
Or in development. And so, we're getting to a point where all of these countries will have a desire to trade over a system that not only is not being inflated away, but one that is also not in direct interference with the West or the ability of the West to sanction or interfere through SWIFT. So, everything you say makes a tremendous amount of sense. The question then just becomes, what is the catalyst? And maybe it's the meeting in October. I don't know.
Ever since the XRP ledger was created since 2013 and till today, they've only been expanding their reach with the banks, with the big banks. I mean, there's pictures with these executives from Ripple with the big bankers, Christine Lagarde, the European Central Bank, and the list goes on. And it's just funny because if they're not doing something that's going to be a market disturbance for the banking system, then why are they hanging around all these bankers? What are they talking about? The Olympics? They're working on big things in the background, and you know how it is as you're an executive for some of these big corporations. There's non-disclosure agreements in place, when you can't talk about certain things. And a lot of times you have to use misdirection to keep people off from really understanding what's going on. It's just strategical, and it's the nature of business on that scale. But I think big things are in the agenda, So.
Misdirection is a topic that I've given speeches on for years. The book, The Art of War, which is, it's taught in every major business school in the world on corporate hierarchy, or major law schools on formulating arguments. It's mandatory reading at West Point and at the CIA. And to not expect misdirection, I think, is very naive. So to your point, yes, I think that is exactly what they would be doing. And they all have non-disclosure statements. And
Of course.
so that's one of these deals where either you do your digging like you guys do, or you just wake up to a new reality. And that's what you are bringing to people, that I hope your listeners understand how important it really is, the digging that you guys do and the thinking outside the box that you guys do. And it's very similar to what I have done, just in a different area.
Exactly.
If you don't dig and research and go to to alternative sources, you have no idea what's coming. And I agree with everything that you're saying. With the limited understanding I have on cryptocurrencies, I agree with all of it. And I think you're doing a great service to your listeners, and you guys should be commended. And regardless of how this plays out, whether it be my ideas or your ideas, however they all play out, critical thinking is important. And that's what you're doing. You're incentivizing people to do their due diligence, to look outside the system. Because if you are not a contrarian right now, I will say this, you're damn well destined to be a victim. And I think what you guys are doing is hugely invaluable, opening up people's eyes to just thinking. And we've all been so dumbed down as of late that critical thinking and thinking outside the box and thinking independently from what we have been told, I guess I'll just simply say unconventional time calls for unconventional thoughts and exploration. And so that's why I'm so happy to be part of what you guys are doing. Just a very small part. Being invited back means an awful lot to me. I am starting, in fact, I just started my own podcast. I did the first episode. I'm going to do many more. And I guarantee you,
congratulations, Andy.
Thank you very much. And within the next few weeks, there will be an invitation to you both to come on and share your thoughts to my listeners as well. Even though I publish everything we do to my listeners, it's about understanding and expanding your thought process, expanding your view of the world, and times are changing very fast. And I think we're getting to that point here. Within 2 months, you could argue that the roadmap for the next decade or longer is right here in front of us, with about 40 days worth of runway or 60 days worth of runway before things change one way or the other. So it's really good to be here with you guys. Anything else you feel like chatting about today?
I think we covered pretty much everything. We'll just wait and see what happens with the BRICS summit. I believe that's October 22nd, if I'm not mistaken.
Yep, it is. And it's going to be a big deal. Like I said, 59 countries have applied formally. You have Dilma Rousseff saying they've agreed in theory to a new system. Yeah, things are beginning to move in a way that I think will catch most people by surprise. So that's why it's so great to be here with you guys chatting and even opening when I come on with you guys, my eyes and my mind is expanded more so than just about anyone else that I go on with. And I don't discount or dismiss anything that you guys are saying. In fact, I think it makes great sense and fits very tightly with what I'm talking about. And so, I just want to thank you as well, not only to be on your show, but to learn from you guys. You're doing a hell of a job, and keep doing what you're doing. It's a real honor to be a small part of it.
Well, thank you very much, Andy. It means a lot coming from you. And we'll
really
be sure to subscribe to your podcast. And everybody, I'll put that link in the description below as well.
It's called Little by Little with Andy. Little by Little with Andy Schechtman. My favorite.
I like it.
My favorite term is little by little, then all at once. Logarithmic decay, and that's what's happening. Whether it be societal, whether it be changing the whole economic system, the monetary system, everything around us. Like even the concept of censorship, right? I mean, when you guys were young, you could say whatever the hell you want, First Amendment rights, right? And then little by little, it's changing. Yeah. And you have to be careful of what you're saying and how you say it and where you say it. And it just seems that is a very appropriate phrase in everything that we see happening, little by little changes, and then bang, all at once. And
destroyed comedy.
That bang, don't know when that bang is, but maybe you guys have a better idea when it is, but I think it's coming.
The world is changing. It's accelerating. And I think what we talked about is really just the Cloward pivot strategy, divide and conquer. We talked about this before too. So the fight ahead isn't really just about wealth. It's about sovereignty. And I mean real sovereignty. That's from within, real freedom, individuality, because that's the very essence what it means to be a human being.
Absolutely. And Cloward pivot, look what's happening in the UK. Look what's happening in France.
Right.
Look what's happening here. It's the same playbook. I mean, it's the whole Western system is being dragged down. And how many people even know Cloward pivot? So thanks for bringing that up. I think it's fantastic.
University of Columbia.
If you guys ever make it down to Southern Florida, man, I would love to share a couple bottles of wine and a steak dinner with you guys and just talk. And if I ever get, over to Texas again, you guys will be the first people I call. But again, thanks for having me on, you guys. You will be on my show. I'd love to come back with you again. There's so much happening we'll have a chance to reflect on all the changes in a very short period of time. But anyways, thank you very much, and I look forward to chatting with you guys again real soon.
Thank you very
Likewise.
much, and thank our audience as well.
Thank you, Andy.
Yep. All right. Take care, Andy. Well, thank
Talking to
you.
you, brother.
You guys be well, man. Take it easy.
Talk to you soon.
Yep. Bye-bye.